as we go live, Prashant, you would take over.
Yeah. Good morning, namaste. So before we proceed further, few seconds to remember and take the blessings of Goddess Saraswati. Om Buddhim Dehi Yasho Dehi Kavitvam Dehi Dehi Me Mudhatvam Harme Devi Trahimam Sharanagatam. O Goddess Saraswati, please liberate us from all imbroglios of life and help us to achieve knowledge. Ladies and gentlemen, welcome to the national webinar on the theme of importance of financial planning and diligence in investing. Organized by Shanti Business School, Ahmedabad and LKMIMSR, Chandrapur. Before we proceed further, I would like to give some brief information about Shanti Business School and the importance of this topic, especially in this 21st century. Friends, Shanti Business School started in 2010, and it's a very unique business school in this part of the country located in Ahmedabad, Gujarat. Currently offering 7 specializations: marketing, finance, HR, international business, data science, communications, and entrepreneurship. Backed by an industrial conglomerate, Chiripal Group, with a turnover of approximately 5,000 to 6,000 crore rupees per annum. A team of diligent faculty members under the guidance of Dr. Neha Sharma ma'am, every day SBS plans to achieve excellence with the motto of creating strategy leaders. When we talk about financial planning, especially when today in this 21st century, the number of options for investment are increasing. No doubt they are giving us conveniency, but simultaneously the confusion is also rising among people. Such webinars, such platforms become a guiding platform for people at large, for the society at large, to help them overcome that confusion. In order to take this webinar to the next level, I am so privileged to invite Dr. Neha Sharma ma'am, Director, Shanti Business School. And since most of you know her, she is there. Currently, you can see her. But let me take this privilege to introduce her in brief. Dr. Neha Sharma ma'am is a Director, Shanti Business School, Ahmedabad. Her area of research is design thinking, service marketing, and startup ecosystem. She is a consultant to multiple organizations. She also helps young entrepreneurs to come out from their confusion and start their startups. She is a passionate teacher, an illustrious administrator, and a wonderful human being who always believes in developing leaders. She is a leader and believes in developing leaders. I request Neha Sharma ma'am to kindly initiate and give her opening remarks to the webinar, and then we will proceed further. Neha ma'am, over to you. Thank you.
Good morning and namaskar to one and all present. At the outset, I would like to hail the partnership of LKMIMSR Chandrapur under the able academic leadership of Dr. Jayesh Chakravorty and Shanti Business School, Ahmedabad. We have seen that a lot of things went wrong during the pandemic, but then a lot of things went right also. And a robust academic relationship, a partnership of synergy that has emerged between these two institutes, which are geographically located far away from each other, is in my mind one such example. I am thankful to Professor Jayesh Chakravorty, his team of faculty members, to always coordinate, to always bring out things that we can do together with them. This seminar, this webinar of one day on financial planning for investments is in fact an idea which took root in his office, and he invited us to partner with him to be part of this, and all of us are sitting here. Once again, as my colleague Professor Parikh said, I welcome our chief guest of the day, Mr. Vijay Khati, who is General Manager, ACC Siemens in Chandrapur plant, a person with enormous experience under his belt and a person who has been responsible for almost a turnaround in the CSR activities taken by the organization. Welcome, a very warm welcome to you, Mr. Khati. Thanks for being here and agreeing to address a young breed of students who tomorrow would be taking up the reins of corporate world. I have with me the keynote speaker of the day, Ms. Kritika Ojha, Senior Manager and a very reputed valuation analyst of Knowcraft Analytics. As we all know, in past couple of years, valuation as an industry and in the financial segment has gained immense importance. Today, any kind of large corporate deals, whether it is merger, acquisition, takeover, or investment, the valuation by certified valuation agency is mandatory. And it is my pleasure to tell here that Knowcraft Analytics is only one amongst the three agencies in India which have been given the mandate to impart courses on financial valuation to students and corporates. It is our pleasure at SBS that Knowcraft Analytics has been an integral part of our placement journey and corporate relations. Ms. Ritika Ojha, who very ably leads a big team of young financial valuers at the Noida office. Welcome, Ms. Kritika. It's a pleasure to again have our partners, Knowcraft Analytics, on this board.
Thank you.
I have with me the other speaker of the day, Mr. Samrat Jadhav, a young person himself, a dynamic person himself, who is the founder of Prosperity Wealth Advisors and who provides a lot of guidance to the young investors. And his first opening sentence today was that youngsters are the future, and it is a pleasure to be with them and to guide them. We look forward to your discourse on investment and what can due diligence and planning mean to a young investor. With this, once again, a welcome to all the academic partner and to all our students from both the institutes as well as other institutes who have been invited to this platform and who have joined us through the YouTube. The recording of the same would also be available on YouTube even beyond the completion of this webinar. Welcome once again. I hope we all have a very enlightening session on financial planning, the need of the day. Thank you very much. Thanks, Prashant. You could take over.
Yeah, thank you so much, ma'am, for your opening remarks and giving a boisterous kickstart to the webinar. And now I request Vijay Khati sir to please share his views, his words of wisdom with the audience on the theme financial planning, importance of financial planning and diligence in investing. Vijay Khati sir, over to you.
Thank you. Once again, thanks to all jury members and thanks to Principal sir. Has given me the chance. It's my pleasure to be a part of today's webinar. Actually, I'm not well today. I requested Dr. Sir ki just it will not able to join, but we have a very informal, formal, unofficial, official relationship with the doctor, so that I cannot refuse that I join. I'm not sharing much more on this because you are all much more expert than me. I'm in last around more than 30 to 35 years in the CSR, in the various cement industries, power industries, as well as I work with the government setup also and some part of the NGO also. During my tenure, I found that the financial literacy is a major part of the country again. And it was again found that this COVID pandemic. It was again recapturing the 1 years before what we spent time on this financial literacy. Because some of the times, some of the industries, some of the workers from the industries lose their jobs. Some of the some of the workers lose their parents. Some of the families lose their parents, mothers, children. It was just, we can say, God wants, they keep it up. But this pandemic linked with the financial, they taught him very much. If you see, if I link with this the social responsibility with my company or the other companies, some of the companies did very good connectivity with the financial interest. Because if the family members lose the job, then how can they run their family day-to-day expenses? It's very difficult. They have only two options: how to get the money for surviving of the life, or what to do. It was, you can say, it was the blank picture of every one of the eyes. But in that situation also, this social responsibility played a very vital role to surviving of these families. Those who are affected, those who are not affected also. Those who are affected, there is no issue because we cannot recover the lost. But if you see the financial matter, so if there is something with your hand, we can provide something to the financial digitalization. So they earn something through this and they survive the family. The small initiatives which we have taken during this pandemic, and we can say definitely in prof that some of the family, I'm not saying that whole, but some of the families surviving their families with a small financial mechanism which we provided to the families, to the nearby industries. So this is one part. Second part is that women played the very vital role in this pandemic, because every time the head of the family lose the job, all the pressure comes on the female family members. We have started the empowerment of the female, and we try to provide some small financial. We have given the small financial inputs: how to run the business, how to create the business, and how you involve in the day-to-day business, which are the needs of your nearby communities. Because we don't have the time to spread your business in from that place to the other place, no. But that time, whatever the requirement of the local communities, we pointed out that, and we have given some type of the financial support, financial literacy or financial knowledge to this women's group. And with the small efforts, they are surviving their families around 1.5 years something. So this is the small interventions which we did during this pandemic. But thank you. But I can say it was the value addition to these small families, because I'm telling some of the example that because my plant is the remote part of the Maharashtra, it is close to the Chandrapur district, and this is again the industrial belt. So we have given all facility to these women. We have around 3,078 women. We have our own federation, and we have given the financial support as well as the financial knowledge regarding, and that is related to the business. So they have started small business like broom making, like masks. In this pandemic, we manufacture more than 4 lakhs masks, and we supplied from this place to, from Chennai to Ahmedabad, and from Chandigarh to Hyderabad, Bangalore, something. So when we started this, when pandemic was occurred, they were very, they were not interested, sir, kaisa chalega. But when we given the emotional support, motivational support these families, and we taught them that how to manage to the financial, basically, how much cost you want for that, how much cost you spend on the material, how much cost you want the marketing. We link some of the marketing agencies in Pan India and link with them, and we are getting order from them. And our role is only to manufacture here and send it to that agency by courier. So this is small efforts in the major pandemic. I can say not 100%, but the small value addition and the smiling face of my all sisters and all my women's members. So I think this is the small efforts which did by the ACC under this CSR wings to this in this the major pandemic. And those who are affected, we lost some of my colleagues also in the plant during this pandemic, and we also support, and we are supporting till today also those who lost their parents. Just now, one family is sitting in front of me. She lost their husband. She's a young child, 39 years old, and they don't have any other option of income generation. So now we are trying to link with this financial model, because we have the different types of agencies which we are taking from the HO level. So we link with them, and we are arranging these small types of training and small types of the workshop or small types of webinar with these women, and they are happily involved in this, and they are getting the benefit of it. So again, once again, thanks to Chakravorty sir, thanks to Neha ma'am. If we get the chance, definitely I will come to Ahmedabad and will meet you in personally. All the jury members, because this is the first time we met on this online. Once again, thanks to all jury members. Bye.
Thank you so much, sir, for such a valuable insight. And few days back only, the entire world celebrated Women's Day, and the initiatives of ACC Cement for women empowerment to support the woman in her life journey are truly commendable. So thank you so much for giving such an auspicious and insightful, sharing with us such an insightful things, and these things are really going to be guiding force for us and the society at large. Thank you so much once again, sir. Now it's time to invite our first keynote speaker, Kritika Ojha ma'am from Knowcraft Analytics, and she is probably the perfect match between the theme of the webinar and what the organization with which she is associated. So Kritika ma'am, over to you. We are so thankful that you are here with us. So it's over to you, and we would love to listen your views on the topic.
Thank you, sir. I'm very excited to be here myself. Can I quickly share my screen? Do I have access?
Yeah.
Okay, so these are just a couple of pointers that I prepared. So I hope this helps everyone navigate through the topics that we would be discussing. Thank you for the lovely introduction. I'd like to begin by thanking SPS and LKMIMSR for inviting me to this webinar. At the end of the session, maybe we can park a couple of minutes to address any questions anybody may have. So let's quickly start with what do we mean by a due diligence process? So it's an investigation of a potential investment or a target company for an ideal decision making, right? The main purpose is to control the overall transaction risk by identifying, quantifying, and substantiating the deal value. Let's take an example here, which maybe each one of us can relate to. So if you're planning to buy a car, what are the different questions that would come to your mind, right? So one is the most important, which is the budget, right? And the second would be, what would be the purpose of the car? Is it going to be frequent long drives, or is it going to be just short intracity drives? Would you prefer a petrol versus a diesel model? What does convenience mean to you? Your driving experience? Would you go for an automatic versus a manual model? what would be the maintenance costs involved post the purchase. And so to answer all these questions, you would start your research process, right? So you would start looking at the available brands, the models, you would study the market, you would probably go and talk to your friends, relatives regarding their experience with certain brands. You'd also refer to various bloggers, auto bloggers posts on which model would best suit your needs above. You would explore the funding options you have, right? So do you want to do a cash purchase, or do you want to go for a loan, or do you want to partially fund it using a car loan and partially cash? What would be the repayment of that loan? Would you be able to prepay that loan based on your monthly income, right? Which banks offer the best car loans? Again, a very important part of our research. Easy documentation process, and faster loan processing, right? So a lot of more research is done, and this entire process is a due diligence process, if I may say so in a layman's language. So as you can see here, even for a company or an investment perspective, due diligence could be of different types. It could be a business, financial, legal, technical, commercial, or even tax due diligence. So for example, let's say a company is looking to purchase a product which is in research and development stage, okay? And now it wants to understand what's the outlook on this product. So it might hire an agency that does the due diligence process, which is called a commercial or a technical due diligence for this company, in which they will analyze the target market of this product, what's the long-term viability, what's the R&D expenses expected to be incurred in future on this product, the type of investment, what's going to be the market traction like when you launch this product, and the value generation it creates for the acquiring company. So all of these questions get answered using this due diligence report. Now, valuations forms a very critical part of the financial due diligence process, or FDD, like you would call it. Any investment decision making or financial planning process would involve valuations. And credible valuations are imperative for efficient working of capital markets, businesses, governments, and there are various stakeholders involved, right? And with growing shareholder activism, importance of independent valuations is arising all over the world, including India. So let me quickly discuss with you some of the professional organizations and valuation governing standards. So though there are very limited regulatory mandates currently in India on valuations, in the US and some other countries, valuations is governed by certain mandates, and all companies have to abide by these guidelines. So there are some of the global bodies providing guidance on professional certifications on business valuation. So for example, we have the Canadian Institute of Chartered Business Valuators, or the NACVA, which is the National Association of Certified Valuation Analysts. It's the ASA, or the American Society of Appraisers, and the AICPA. In my experience, I've mostly been involved catering to the valuation needs of our US-based clients. So we refer to the AICPA and the revenue ruling guidance very extensively. So these just help these just lay down certain guidelines that need to be followed, so that there's uniformity in the approach across the valuers from the world. Right. Knowcraft is proud to be associated with the India chapter of NACVA, which is the ACVA India, which provides the CVA designation, which is the Certified Valuation Analyst. I myself am pursuing this designation currently. So because valuations are governed by such regulatory compliance and are mandated in the US and a lot of other countries, a lot of valuation appraisers are increasingly reaching out and setting up their extended teams here in India, which provides them with the requisite skill set and enhanced efficiencies. And in India, the IBC guidelines, or the comprehensive framework laid by the companies and registered valuers and valuation rules, and guidelines provided by the Valuation Standards Board and ICAI RVO, are fueling the growth in this profession. So currently in India, the chartered accountants, RVs, or the registered valuers, as we call them, and SEBI registered category 1 merchant bankers are some of the designations that are authorized to do certain kinds of valuations. So, so with this, I think there are a lot of opportunities that are created in this space. Now, why do we need a regulatory framework, or why are these guidelines so important? So in the recent past, there has been a concern on valuation and its impact on companies, shareholders, creditors, and other stakeholders. Fund providers have been actively asking for inquiries into valuations submitted by the companies for fund mobilizations or restructuring. So regulators have also been raising questions on the valuations submitted in the context of transactions entailing purchase or sale, or even income tax assessment, right? Banks and financial institutions are concerned at the nosediving valuation of borrower assets when their accounts are stressed and become an NPA, right? And we see a lot of buzz and cases and updates from the NCLT. So, in the context of the IBC, the authority has on several occasions raised concerns about the sharp differences between the valuations arrived at by two different RVs or valuers, or the variation between the amount. So, to set uniformity in the approach, the valuation reports prepared by the RVs are guided by these regulatory frameworks, and that's why they become so critical. And then, so talking a little bit about what is a price and what's a value. So price is an outcome of a transaction, right? If I purchase something at, let's say, 10 rupees, then 10 rupees becomes the price. But to arrive at that price, there are certain negotiations happening, right? So price is influenced by market conditions and negotiations on value. Value would not change materially unless the fundamentals of a business or an investment change. So there might be changes to value with date, purpose, even person, time, and there are a lot of other factors that drive the value. So, for example, am I valuing a company from a seller perspective or a buyer perspective? At times it's a trade-off. All the buyers want to push the value down, and all the sellers would want a higher value for their asset, right? So let's say there's a deal value of 100 rupees for a seller, might actually be an underestimate of the true value. When we talk about companies and M&As and deals happening in the space, when you perform a thorough valuation analysis, you break up the value, this 100 rupee value, into the different assets and liabilities, and you try and assign value to each of these. And you might come up with a higher value, saying that this business and this company has a higher potential, and it might be valued more than rupees 100. Now, from an investor perspective, you might value the company lower than rupees 100, arguing on risks related to certain key employees, key customers contributing majority to the revenues, or dependence on a particular supplier, and so expecting a higher return for this kind of an investment. So that's what drives the value of an investment. Even the nature of subject interest is equally important. So let's say the value of a private company is 100 rupees. Now, if a shareholder wants to sell 6% of their stake to another interested party, would you say the value of that 6% stake is 6 rupees? Well, probably not, probably yes. But because that 6% stake is a minority stake for that shareholder, given it's a private company and it's not a publicly traded company, right? So this investment becomes sort of an illiquid or non-marketable investment for the potential buyer relative to the same stake in a public company. Meaning there's no readily available market. If I want to sell this 6% stake next morning, and liquidate and get cash in return, I may not find too many buyers available, right? So that would drive the value down from 6 rupees. Also matters is the type of 6% stake. So whether it's a preferred stake or a common stake, what are the rights and preferences like? Do you have seniority, or is it not, or is it junior to other security holders in the company? Does it come with a voting right or not? So an analysis of all these factors becomes critically important when you're trying to estimate the value of that investment or that stake. So there are the rules notified under the Companies Act 2013, which designate IVBI as the authority for development and regulation of the valuation profession. And these rules provide for 3 broad asset categories or classes. So one is the land and building. So there are designated and specialized real estate appraisal teams that look into this. There's plant and machinery, which is engineering and construction consultation teams. And then there's securities or financial assets. So the business valuation teams have an expertise on this. So all of these types of valuations require different skill set and certain specializations. So let's talk about a typical life cycle of a business. So broadly categorized into startup, growing companies, high growth, and mature, right? So the financial planning and funding decisions vary at each stage, each of these stages. So does the valuation of the company. For example, at a startup stage, there is no history or track record or of any earnings, right? The expected earnings, the expected return or cost of capital is going to be extremely high. If I am an investor and I'm investing in a startup company with probably just an idea in place, I might expect a higher return on my investment, right? Since it's very risky. Now, as the company starts to grow, profit generation start, albeit it's low initially, and the company has created some history of cash flows, but the return expectations are still high, but not as high. For high growth companies, profits are high and they have sort of a demonstrated track record, and the cost of capital normalizes or sort of aligns with the peers in the industry. Eventually, a company enters a mature stage. And so at this stage, it has a proven track record, normalized earnings, and a cost of capital which is either reasonable or it might be high again, depending on what's the eventual fate of the company. Is it able to sustain this kind of growth? The funding requirements and valuations would be very different. So let's take an example of an ed tech startup, right? So let's say the idea is in place and the entrepreneur is discussing seed funding with friends and family for developing the idea further and making it market ready. So that's the seed funding or the initial stage. Now, thereafter, the focus is on developing the platform or your application to make it user friendly, right? So spending on the tech developers, thinking through provider acquisition. What do we mean by provider acquisition? So if you're thinking of, so if your idea of an ed tech is to provide career counseling, tutoring services, certifications, or exam preparation contents, for you, provider acquisition would mean trying to bring on board teachers, mentors, education content writers, career counselors, right? So it's like raw material procurement for a manufacturing firm, okay? The solid your provider acquisition is, the stronger your business model is going to be. So now to do all of this, you raise the second stage of funding, which is the angel funding. Followed by the third stage of funding, which would be a pre-series funding. which is needed for product launch, branding, advertising, to fuel the front end acquisition or the user acquisition, which is the second part. And obviously, a more important part, which become your customers or your subscriber base, which is the students, right? So this is followed by the series funding. It could be A, B, C, different rounds of financing that we see and read around, which helps in increasing the user base through a go-to-market strategy or regular platform upgrades that are needed in your application or your technology. Or there could be app enhancements. There could be a diversification strategy that you're thinking about, like maybe going offline and acquiring offline coaching centers. How to sustain that brand into the future. So for doing all of these activities, you will require the series funding. Now, series funding and pre-series funding, these could be a mix of hybrid. So it could be equity, debt, venture capital debt, preferred convertible, and so on and so forth. It's important to understand that the debt is mostly going to be a venture capital debt and probably not a bank debt, because securitization and guarantee issues, right? If you're a company at this stage, you may not have the kind of security to provide to the bank to raise funding. So you would go to a venture capitalist for that. Now, as you grow and mature, eventually at this stage, you might go for a bank financing. Okay, so here's just a quick example of the fundraising process and the startup valuation. And let's say there's an early stage company developing a product which is just doing the R&D right now, at R&D stage. Okay, so no revenues yet, there are only expenses, and it raised its second preferred financing in the year 2020 in the amount of 20 rupees at a pre-money valuation of 100. Okay. Now that so the final valuation of the company after raising these 20 rupees becomes 120 rupees. You'd ask me, how was the valuation of 100 rupees arrived at? Well, that's where we come into picture. So for this kind of a startup, which has probably no asset other than some cash balance on its balance sheet and the in-process research and development asset that it's pursuing, the value of that particular asset probably becomes representative of the company value. So we try to estimate the value of this asset or the company using various underlying approaches. We would try to look into the future earnings potential of this product, applying certain probability weights to various success, failure, or stay private scenarios. For example, what if the beta versions fail in the next 1 year, or what if the further upgrades are needed to the application or the product in this case, or let's say the R&D gets accelerated due to a breakthrough innovation that's come our way. So strength, and other than this, a very important factor is also the strength in the capabilities of the founders, their past experience, their passion, the R&D team that's behind product development. So all this demonstrates the company's possible value generation in future and would add to the value of the company. This would also help ensure the company's capability on raising future funds to support the ongoing operations. Right? We might also look at trying to find similar comparable companies in the market, developing similar products, and what were their recent rounds priced at, if that information is available. So that's how a typical early stage R&D company would look like. Now, let's say forward to 2021, it executes a licensing agreement with a large corporate. So let me try and explain to you in a little simpler term. A licensing agreement would be nothing but a large corporate which is well established will have all the available resources at its disposal, right? The manufacturing capabilities to to accelerate the product development for this small private company. It can help fund the R&D for this company with subsequent assistance in product launch and distribution. Because this large corporate will have existing supply chain and logistics and capabilities in place, it might also have very good distributor network. So that can be leveraged by this small private company to make its product market ready and eventually launch it. In return, the large corporate will ask for certain percentage of profits in future when the product is launched and the sales start to come in. So this is something we call royalties. Sure, we are all aware of this word. So now if this private company wants to pitch to its investors to raise the third round of financing, let's say in 2022, what would be the value of this company? Right? Because of this licensing agreement in place, there has been value generation, right? So if I'm trying to value the company in 2022, I'll try to incorporate the value that this licensing agreement has created for this company. And these are called IP or intellectual property valuations and a different specialization altogether. But in addition, we study the developments over the past 2 years in this company since the last fundraise in 2020. So how much value was created at the expense of the cash burned over these 2 years? How much cash did they spend in their R&D? And what was the development in the product R&D? Is the company on track for its planned product launch, or are there delays? Or did the intermittent product testing yield satisfactory or not so satisfactory results, right? Was the R&D expense as according to the budget, or was it higher or lower than the budget? So all of these factors need to be looked into before trying to arrive at a reasonable value. There are these are the kind of questions that any investor would be interested in to know before agreeing to invest. So a couple of questions that arise at this stage is: how much is the funding requirement? The financial planning and capital budgeting help determine what the cash flows would look like, how much funding is needed. How would it affect the current capitalization or the existing shareholders' rights and preferences, right? And how much stake would be diluted. So to facilitate such investment and fundraising decisions, valuations becomes really important in arriving at solutions. Now, looking at the 2023 year, let's say for some companies, at times where the product development is linked to certain key milestones, let's say product validation, followed by beta testing and launch in the next 2 years. So funding might be structured in different tranches or blocks through these 3 years. So if I am an investor, I would come to you and I would tell you that I'm ready to invest this much initially, but over the time of the next 3 years, depending how you fare on your product validation and beta testing, I would invest another X and Y amount subsequently, right? So let's say an investor approaches the company to invest 50 rupees right now, followed by 50 rupees in the next 2 years, and expects a return of 20% on this investment. How much equity stake would you offer to this investment in exchange of this funding? So for these type of discussions and decisions, the valuer starts to look at the 3-year forecast of the company, the reasonableness of the assumptions, any other financing round that's expected to be raised during this time, and what's going to be the revenue or profits at the end of the year, and how do these spec to the industry multiples. I'm going to take a small pause here just to make sure there are no questions at this stage.
Ritika, the question from the YouTube are being collected separately. So they would only come to you at the end of the presentation. Hello, Ritika. Kritika? Kritika, can you hear me?
I think she can't hear.
Hello, Kritika. She's not.
Sorry,
Yeah.
ma'am, you were saying something. I couldn't hear you.
Yeah.
Yeah, so the questions are being collected through the YouTube separately. We will give it to you. You wouldn't be able to
Okay,
see.
I hope I can continue with the session. I know
Yeah.
this is live on YouTube. Yeah, okay. All right. Sorry about the glitch there. Okay. So now let's say we are in the year 2024 and 2025, and the company is now looking for an exit in the next couple of years. So what are the different exit options that they would have at this stage? An IPO or an M&A, or what would be the valuation in 2025, keeping all these future exit scenarios in mind. So we try to build different scenarios depending on the product's market traction, performance, expected growth and profitability, etc., and assign certain weights to these scenarios to come up with a weighted average value. So the kind of exit scenario discussions are something driven by investor long-term strategy for each of the business. We'll quickly cover it maybe in the next couple of slides. So there are different types of intangible assets for each of the industry that carry tremendous value, right? So let me start with an example of banks. For a bank, the customer deposits is a liability, right? We all know that. However, the existence of this liability sort of creates an intangible value to the bank. Why? Because deposits are the lifeblood of a bank, without which there would be no funds for loans and investments. So when you're thinking of purchasing a bank or you want to invest in a bank, you receive a built-in base of usually stable customer relationships, right? This customer relationship is going to have economic benefits to you. So bankers place value on deposits and spend time and money building branches, staff, offering premiums, advertising, and hence the core deposit intangible becomes a very critical asset or an intangible asset to study when you're investing in or approaching the deal of a bank, right? Similarly, subscriber base becomes a critical asset for some of the subscription based business models. If it's a software company, there could be a developed technology that's the value driving asset. So here's just a quick snapshot of the entire process. So we discussed the first base of the pyramid, the financial analysis and the economy and industry analysis, the risk analysis, which is a very important aspect. What are the risk factors that we need to keep in mind when trying to estimate the value of any investment or a company? The approaches, asset, market, or income, the discounts and premiums, and then getting to the eventual value of the company. The discounts and premiums are something that we discussed initially as to whether the 6 rupee worth stake is the ideal stake, is the ideal value, or should it be less than 6 rupees or higher than 6 rupees, right? So those are the kind of adjustments, discounts, or premiums that we need to make. to get to the value. I think that's all from my end. On a closing note, overall the session attempted to explain the role of valuations in a business's life cycle and providing solutions at various stages of investment, fundraising, due diligence, M&As, regulatory compliance. In today's dynamic business world, being able to take ideal financial decisions will help the businesses and valuers provide them the necessary tool to achieve that. Right. So with that, I hope the session was helpful. I'll be happy to address any questions that you may have, or you can reach out to me. You have my email ID. Thank you all.
Yeah, thank you, Kritika ma'am, for giving a proper understanding in a very simple and lucid language on the theme of the webinar. Now, we have a couple of questions. So can we take the question right now or at the end? So can I ask the question on behalf of the YouTube audience? Kritika ma'am, am I audible to you? Oh, again, there is issue.
Whenever she rejoins,
Okay.
we can take it up. We can have our next speaker.
Yeah. So now I request Samrat Jadhav sir to please guide us, accentuate on the topic and of importance of financial planning and diligence in investing, which is a very, very important, crucial, critical topic nowadays. Lot of resources are available, but confusion remains the same. So over to you, sir.
Okay. Thanks, Professor Parekh, for giving me this opportunity to present. Let me just share my screen and then.
Ms. Kritika, we had a couple of questions for you. So before Mr. Jadhav start, would you like to take the questions?
Sure.
Mr. Jadhav, could I request Prashant to just complete the
Yeah, surely. No
couple of questions that we have so that it remains relevant.
No problem.
Professor
Yeah,
Parekh?
ma'am. Yeah. So, Kritika ma'am, this question, the first question is regarding these various rounds of funding, Series A, Series B. So we read a lot about these in the newspapers that this particular startup has gone for Series B round, Series C round. So can you share something on what these rounds are and how it gets decided that this is Series A round, Series B round? What is the difference between them?
So, first of all, these are just naming conventions. So,
Okay.
you could call it a Series X round as well. But essentially, what remains is the stage that the company is progressing and what are the requirements of the fundraise. Naming can be anything, but important is to understand the amount, the usage of the proceeds from this financing, and what's the long-term strategy of the company. So is it looking to exit 5 years down the line, in which case it might raise 4 to 5 rounds. At times, companies have a strategy to just exit in 2 to 3 years, maybe. So they might just raise 2 rounds, A and B. That's all.
Okay. And the next question is, after your session, is that due diligence in mergers and acquisitions. So one of the attendee wants to, if you can give one example on that, or example from corporate world wherein due diligence being done by one organization which has acquired another organization or has merged with another organization. A couple of examples if you can give.
Sure. So I think due diligence forms part of any deal that's happening right now. It's majorly a process that happens pre-deal. So before acquisitions are finalized, or you would hear this term very often, that due diligence stage पे है, it might get finalized if everything checks off correctly at that stage. So yes, be it a small acquisition or a large acquisition, it has to be done. And Yeah, if I were to give you examples, those would be like historical examples. So any deal that successfully happened, yes, it went through a due diligence process at that particular stage. And then there are different areas that we initially focused on. Legal due diligence is needed so that the acquiring company can gain comfort that all the legal documents and agreements are in place. Tax due diligence is done so that the acquiring company can gain comfort that the target company has no tax liabilities. What if I were to buy this company and then I realize that, oh my God, this company has 100 rupees tax liability that I need to pay. So to avoid all of this confusion, this process is critical at pre-deal stage.
Yeah, thank you. So these were the two major questions uh, after your session. Thank you, ma'am, for enlightening us, the audience, on the theme of the webinar. Now, Samrat sir, sorry we interrupted you. Now it's over to you. Yeah.
Thank you. Just share my screen. Okay, hope I'm audible.
Yes, you are audible and we can see your screen also.
Great, fantastic. Okay, so basically, whenever we talk about financial planning or finance, a lot of people get confused. Even people who are expert into it could not plan it accordingly and very rightly. Okay, so what we are going to discuss here is all about the financial planning factor and the due diligence of investing, what we should do, what we should avoid, and actually how we should plan our daily financials, basically. Okay, and basically this is more important for actually everyone, but especially for young generation people who will be graduating now and going and having a job and accordingly plan their finances. So, just as a brief about the depository of CDSL, it's basically incorporated in 1997. Like major demat accounts have been opened here in CDSL, and it's the only first and only listed depository of Asia Pacific. Okay, and it's also of the first depository to operate in Gift City IFSC, with all other certifications which are available. Okay, about the accounts, we need to congratulate CDSL on one part that they have crossed 6 crore demat accounts across India, which is an amazing number. So I think this fantastic figure happened post-COVID, where a lot of people opened their account and started investing into equities. And the financial inclusions basically has been made in this last 2.5 years on a larger side. Okay. What lessons we'll learn today on a very simple note? The need of saving. Okay, inflation and investing are very important topic. Okay, financial planning and investment planning. So there is basically a differentiating between financial planning and investment planning. A lot of people get confused out of it. Investment asset classes and asset allocations. So what are different types of investment asset classes and what kind of asset allocation I should do? Mutual fund, we only hear about it. We also know that we should do an SIP. But what all about mutual fund, we'll just learn on a brief side. I will introduce about the capital market, the right issues, do's and don'ts before trade, very important, and all other services which are offered by our depository participants. And we'll summarize this with the key takeaways for the investors. Okay, so to begin with, the very important factor, why the need of saving. So basically, as a human being, I can actually just earn money, spend it, and live life free, right? So that does not happen on a longer period of time, because as you grow old, the earning potential or maybe the earning capacity of a human being is reduced. Okay, so that's the reason a lot of people basically save money for the future perspective. Okay. We also like as a human being, we don't have a tendency to save on a larger side. That is also one of the reason why corporates or government have made mandatory investments into your PF factor if you are a salaried employee. Okay, so and they've also given discounts. So if you invest, you get an benefit of ATC of 1,50,000 rupees accordingly. So everybody knows the importance, but the problem of investing basically has a bigger gap. So first thing, why a need of saving is there to pursue a dream career. Okay, so a lot of time it happens basically that I want to do my further education, let's say my master's program somewhere outside India, or maybe at a bigger institute. Okay, but the fees is on a higher side. If you save accordingly, and then basically if you go for the course, that is also one of the reason for saving. Long-term social security is a very important factor. As I said, that human being has uh, a capacity at a particular age where the earnings can be stopped, okay, accordingly. So that's the reason a lot of people basically save. Saving for fun is a very good term. It is coined, I think, 3-4 years back, where people basically save money to spend it on a higher side, maybe a holiday, or buying a dream bike and going for a ride to Leh Ladakh, etc. Marriage, yes, in India this is a very older term. Uh, Basically, if you'll ask me, there are only two important factors where savings have been done since so many ages. One is child marriage, and the second one is retirement planning. Okay, so marriage is such an factor where a lot of money has been saved since so many ages across. Today, also a lot of people have that worrisome idea that okay, I need to save for my child's marriage. Okay, they do not save more onto child education, but they will save more onto towards the children marriage basically. Okay, leaving a financial legacy, yes, this is also one of a good term. Like you basically save that so that the next generation can live easily. Okay, big purchases, like if you want to go and buy big things like a bigger house, or maybe a bigger car. So for that also people save over a period of time. And retirement planning, as I said. So the major key, as I told you, that you should save, okay, is the first factor which you should not ignore is retirement planning. So the day when you start your job, okay, from that particular day, or you should start saving for your retirement. Because what happens is, it's the magical formula basically works very simple in terms of when you save for a longer period of time, okay, the end of the period looks fantastic for you. Okay, a lot of people say, okay, now only I have started, I am just 22 or 25, why I should think about my retirement. Okay, but the magic at the retirement age, if you start early, will create a bigger impact. The magic of compounding is the basic word for to be used into this. Okay, why we should save? So it's a very simple thing. Inflation and investing basically correlates with each other. Okay, as I say, that money basically loses the value over a period of time. So something which was available at 10,000 rupees 10 years back, today it is available at 15 or 18,000 rupees. Okay, so the best example I will tell you is a movie ticket. Okay, a movie ticket 15 years back was 30-40 rupees, maximum 80 rupees. Okay, today the movie ticket starts with around 200 to 300 rupees. In metro towns, it goes to around 500-800 rupees also. Okay, and that's the same amount you spend also on other items like popcorn and other factors. Okay, so this is how inflation has been increased. This is how inflation basically impacts our saving. So if you see, if you ask me, on an average, the inflation rate is around 7%. I'm taking around 20 years of average. Okay, so the inflation rate is around 7%. So if you don't get anything above 7%, okay, so your money is not going to grow. Okay, so like today, if you take an example, a fixed deposit is offering you around 5% of interest rate. Now, if inflation is 7% and the fixed deposit is offering you 5%, so you are actually losing 2% as your money. Okay, but if any product who is offering you, let's say 8%, so actually your money growth will happen is 1%. So there is a concept known as real value of money increasing and the total value or the gross value of money increasing. So gross value is 8%, but the real value is only 1%. Okay, if inflation is 7%. So remember this: whenever you invest in an instrument which should beat inflation. Okay, that's very important. Otherwise, you just keep that money in your wallet or in your cupboard. It will not make any difference. Basically, the money value will deteriorate over the period of time. So that's the reason inflation is a very, very important key. Okay, because the best again is the fuel one. I remember when I started fueling up, I think 20 years back, it was 28, 29, 30 rupees, I think. Okay, today it is 115 rupees. So this is how inflation basically kills. Okay, and inflation is on a higher side always in our daily consumption items. If you hear from your grandmother that the entire house used to be the entire house used to be run with 3 or 5 rupees of the income. Okay, and that time it was not nuclear family. It was uh, a larger set of people. Okay, like 15, 20 people staying together. Okay, so that is how inflation basically kills us. So always think that if I gave you the idea that the inflation over a period of time is 7%. Okay, so make a note of it. Financial planning and investment planning are actually two different things. Okay, so how is investment planning works? Basically, that we earn, okay, we spend, we do the entire expenses, and then whatever is been left, we will save it. That also depends basically. ठीक है, इस महीने नहीं करते. Let's see how we can do it in next month, and that next month never happens, and ultimately you never see. Okay, but the financial planning part comes when you actually plan it through a disciplined way. Okay, you earn the money, you save, and then whatever has been left, you actually spend it. That's the real way of investing, or basically planning your entire financial part. Okay, so this is the very differential experience when it comes between investment planning and financial planning. Investment planning everybody does. Okay, if you ask anybody that, okay, do you invest? So you say, yeah, I invest. Okay, where do you invest? I invest in FDs, I invest in provident funds. Okay, I invest in recurring deposit, postal savings, maybe insurance plan. Okay, what is the average returns you get? 6%. And then you tell him that boss, the inflation is 7%. Your money is not going to grow. It will destroy by 1%, and again you will pay taxes onto it. So that's a different factor. Okay, so that's the reason financial planning plays a very important role in your managing finances basically. Okay, so as Mr. Warren Buffett, the well-known person in investing, he says that do not save what is left after spending. Okay, instead spend what is left after saving. So that is how the financial planning formula works out. So this is a golden formula. Okay, earn, save, and then spend. Okay, so what are different asset classes? Okay, now I understood that the need of saving is an important key. I also need to save because I need to beat inflation. Else at the retirement part, it would be the same factor as I live today. Okay, or maybe my living standard would be lower than whatever I live today if I do not invest accordingly or beat inflation in an asset class. But what are all asset classes which are available? Let's see. Okay, before that, first so what all asset classes are available? So we have stocks, we have bonds, we have cash, we have other alternatives which are available into asset classes. But let's take one by one. Like say 20 years back, if somebody got a lottery, somebody won in lottery, and if you ask, okay, what you will do out of all this money? So the first thing which I will ask is, okay, I will first go and spend a particular part of it. After that, because 20 years back, there were no such avenues available also. There were no malls, there were no holiday destinations, okay, no such road connectivity and everything. Okay, so we'll spend some particular part will spend. And the second thing which they will say, okay, I will do a fixed deposit in some bank, okay, or I will keep that cash in my home. So anything which you keep the money in your bank account, okay, or you invest into instruments which are cash or cash equivalents. So like for an example, liquid funds, okay, liquid mutual funds or debt funds for an example, or you invest into fixed deposits such as corporate fixed deposit, bank fixed deposit, okay, or a recurring deposit for an example. So all these are basically, this comes under the universe of cash or cash equivalents, okay, because they are ready cash, right? You can actually go and withdraw it from the ATM immediately whenever you need it, Okay, or you can break your fixed deposit and get that money immediately. You can break your recurring deposit, your postal savings, everything, your corporate fixed deposit also accordingly, or your liquid funds or your debt funds accordingly. So anything which can be immediately encashed, okay, into cash are known as cash or cash equivalents. Okay, then comes the second factor, which are other alternatives. Okay, so like we can say bonds. So bonds are like there are government bonds which are safe or on a safer side, but there are other bonds also. Okay, there are corporate bonds where people actually invest into a particular corporate which has a lock-in of 3 years, 5 years, 7 years accordingly, and they pay you interest also onto it. Okay, obviously the interest will be on a higher side than a bank. Else, people will go to a bank and invest directly rather than investing into a corporate bond. You can also invest into government bonds, which offer 7.5% interest. Okay, and nowadays it has become very simple because now government has announced that retail people can also come and invest into government bonds accordingly. Okay, so bond is also one of its sector. Then let's say we have other things that all other alternatives. So basically, bonds will have a medium risk. Okay, uh, medium to low risk, you can say. Okay, then the next is other alternatives. We can say real estate, which is a favorite of a lot of people, where they always feel that after investing into fixed deposit, the next investment which we will do is real estate. Okay, but the problem with real estate is, if you see, real estate grows by averagely 14% year on year. Okay, anything between 12 to 14% depending upon area to area, but anything between 12 to 14%, and this is, I'm talking about a global figure. Even if you have a property in a prime location in Mumbai, in Bandra, okay, or BKC, still it will grow by 14%, not more than that. Or even if you have a property at New York Times Square, averagely it will grow more, not more than 14%. Okay, so this is an average returns on a real estate. Because, but what happens in real estate is, you buy a property and you forget and check the prices every day. You don't go and ask the prices every day because you know it's a long-term investment. Okay, though you can invest into real estate, you can invest into gold. Hedge funds are also available. Nowadays, cryptos are also there. Okay, which is a very high risky one. Okay, people can invest into also arts. Okay, so that is also one of a new way of investing. So I think 2 years back it was more onto collectibles of art. Nowadays it is more onto an NFT. Okay, where people invest, especially young people. Okay, but now all these asset classes are moving towards on a riskier side. Okay, so the like cryptos are the most riskiest one. Okay, gold, yes, it's basically the best instrument to hedge against inflation. Okay, uh, hedge funds are there, which basically they hedge your risk against the volatility which is available across. Okay, again you have hedge funds in equities as well as into debt also. Okay, real estate I explained in detail. NFTs, again, if you consider NFTs as an investment, again it's on a higher side. The risk is on a very higher side into it. Okay, let's move to the most favorite one since last 3 years, that is stocks. So equity. So here basically when you buy a particular stock or when you invest into a particular equity of any company, so you are actually buying the business of it, or you are becoming a part of that company. So unless and until you understand that business, you should not invest into that particular stocks. But again, the same thing, it's higher risk, the returns are also on a higher side. Okay, so the more risk you have, the more returns will also be there. The less risk will be there, the returns will be also on a lower side. Okay, so these are all asset classes which are available. Now the biggest confusion is how I should allocate my asset class. Okay, my asset allocation. So if I'm age of 50, what should be my asset allocation? Should I go and buy gold? Should I go and buy equity? Should I go and buy bonds? Or should I just keep my money in my cupboard? Okay, or if I'm age of 20, 25, I've just joined the job, what should I do? Okay, so this next slide will actually help you understand how the asset allocation should be done. So in a very simpler format, when you are very young, you can take risks, because even if the money has been lost, you have time to get that money back. Okay, or invest in an asset class where the money will grow, because time is on your side. Okay, but the more older you grow, okay, you have you have very less time left. Okay, so in a very simple way, as you are young, you should invest into riskier asset classes. As your age grows down, basically, okay, you should start moving it from your riskier asset to a lower risk asset, basically. So in a simple format, when you are at your 20s or 25, or let's say, let me give you a very fantastic way of understanding. Whatever your age is, okay, so let's say if you are aged 25, so you should invest 25% of your money, okay, into safe assets, okay, and 75% of your money into riskier assets. As your age grows, okay, you should shift your investment accordingly. So this is a fantastic way of understanding. Okay, so if you are age 50, so 50% should be into riskier assets, 50% should be into lower risk assets, basically. Okay, and as your age grows, you should move out accordingly. Okay, I think basically once you cross your 60s, you should not keep anything into a riskier asset. You should move entirely into your fixed assets part, basically, where your returns are fixed. Okay, they are low, understood, but they are at least fixed. Okay, because tracking those investment again is a cumbersome activity. Okay, and at that particular age, you would basically require a sound sleep at night. Okay, so that's the reason you should move to a safer assets class, basically. Okay, but as your age is lesser, you can move into your higher risk asset classes, basically. Okay. So if you're still confused where to invest, this is the best way to invest: a mutual fund. Okay, we have heard this since so many years. Mutualfundsahihai.com was a fantastic initiative taken by AMFI, where it made people understand what a mutual fund is there, and the investments into mutual fund has been grown up. I would like to thank every retail investor in India, where it has made Indian institutions a stronger part. Now we don't have to depend on the foreign institutional investors for our Indian equity markets to control them. Okay, so here our domestic people have actually helped us to grow our asset under management, so where we can control our own markets accordingly. Okay, so how a mutual fund basically works is in a very simple way, that you're confused where to invest, which asset class, and you want to invest, but you need an experienced person for it. So mutual fund basically collects money from such kind of people who want to invest, pulls up the money, appoints an experienced fund manager, okay, who understands how to manage the money and who tracks everything every day, which is his job. Okay, then the money has been invested into securities. These securities could be either equity or it could be a debt instruments, depending upon what kind of mutual funds you subscribe. Okay, the returns are generated, and the returns are basically passed on to people. How much is depending upon their allocation. So if I invest 1 lakh rupees, if 1 lakh rupees has generated 5,000 rupees as a return, so those returns will be passed on to me whenever I tell them that I want to book the profit and get out of the mutual fund accordingly. Okay, so it's a simple way, basically pulling up the money, giving it to an experienced fund manager to manage it, who tracks it accordingly, and he generates returns, and then the return has been passed on to the investor. Okay, so why mutual fund? It's just a very good instrument globally, I will say, because it has fantastic flexibility. Okay, so it has diversification, it has convenience. There are risk adjustment returns, because if you do a systematic investment plan, that is every month you invest systematic amount, okay, the investment will happen on the upper side, downer side, everywhere, but averagely your money would be growing accordingly. So there are risk adjustment returns, the flexibility available, liquidity available. Okay, there are tax advantages if you invest into a tax advantage fund, and very important, it is professionally managed. So flexibility in terms of why I would say why I coined the term as flexibility, because let's say if you want to invest into a mutual fund where it invests only into power companies, okay, power sector companies. So you have a mutual fund for that. You feel, no, yeah, I feel that I don't want to take risk, but it's okay. I 50% I can do it. Like my money should be invested 50% into equity, 50% into debt instruments. So you have a balance fund for it. Okay. You feel, no, my 70% should be invested into debt and 30% only should be invested into equity. So you have that category of balance fund also. Okay, you want, no, I only want to invest, I have time by my side, and I want to only invest into India's best companies, best blue chip companies. So you have a blue chip fund for it. Okay, so you feel that, okay, I want to invest every month 2,000 rupees, you have it. I want to invest every day 100 rupees, now you have that scheme also. Okay, you started investing, you are continuing investing 3 years, 4 years down the line, you feel that I want to withdraw some amount, that option is available. You feel I want to top up the amount, that option is available. Okay, you feel that, okay, I've invested a lot, I need to withdraw it and invest into some other asset class, you can do that. Okay, you feel you want to stop the investment right now, and after 2-3 months you want to again start, you can do that. Okay, so that's the reason the flexibility is available into mutual funds. Okay, so people who do not want to understand the market very well, who don't want to get involved into all the other activities by understanding economics, understanding stocks, understanding the entire culture behind it, mutual fund is a fantastic way to invest. Okay. So what are capital markets? Basically are moved into two parts, primary and secondary market. So primary market, nowadays people know it very well. It's a simple factor as IPO, okay, initial public offering. So whatever is available initially is through routed through a primary market. Okay, we have seen it through a lot of IPOs which happened recently, and the biggest one which is coming up right now. Okay, secondary markets are those basically where this initial public offering, when it happens, those stocks get listed on the secondary market. So what happens in the primary market is, here a promoter, basically the people who have actually founded the company or invested in the company at the initial stage, they offer their stocks to retail people like you and me, everyone. Okay, and once we get those shares, now if the particular price increases and I want to sell it, so that transaction basically happens on a secondary market. Okay, so where it happens on stock exchanges. So we have Bombay Stock Exchange and we have National Stock Exchange, where this company get listed, and there these equities change hands between the investors which have got it. Okay, so if I have got a particular stocks through an IPO allotment, and I feel that, okay, I got 20-25% of returns or 15% of returns, which was my expectation. Okay, and I want to sell it, there is somebody who want to buy it. Okay, because that particular gentleman feels, or the lady feels, that from here also there is more upside of 20-25% into that particular stock. Okay, so I sell it and that particular person basically buys it. Okay, so these kind of transactions have been done through a secondary market. Okay, to transact into a secondary market or to apply for an IPO, basically you should have a demat account. Okay, and to open a demat account, demat and trading account, basically you should have these things. You should have saving bank account, a trading account, and a demat account. Okay, so basically this concept is known as a 3-in-1 account. So 3 things: a saving bank account, trading account, and demat account. Okay, one important thing is you cannot invest in cash into equity markets. Okay, so that's not allowed at all. If somebody says that they can do it, it's an entirely fake or a scam. So please do not fall prey for such kind of things. Okay, it has to be routed through your saving bank account only. Okay, not of my parents or somebody who can invest on your behalf. Okay, so saving bank account, why you require? Because the money has to be routed. Okay, trading account is basically an account where the transactions get executed. Basically, I place a buy and sell request. A demat account is basically where I hold my shares in an electronic format. Okay, so you can say my trading account is the shop. Okay, my demat account is my go down. So okay, whatever transactions I do it through my shop. Okay, my entire storage, like I buy something and hold it for a longer period, it goes to a go down, which is a demat account. Okay, and all this money basically transaction happens through a saving bank account. These are the prerequisites or documents basically to require to open a demat account: your PAN, your PAN address proof, and your bank details basically. So these are required documentation accordingly. Okay, so these are standard documentation for any KYC which has to be done. So KYC basically is know your client. Okay, it's a mandatory requirement nowadays for anything. Who all can open demat account? So these all people can open demat account. So individuals can open up to 3 people. So 3 people totally coming together and they can open a joint account. Okay, HOFs, minors, they can open account through their guardians. Okay, keeping them as a nominee accordingly. NRIs can open corporates, trust, banks, FPI. So anybody can open a demat account and invest into Indian equities. Okay. Yeah. Benefits of demat account. Obviously, it's safe, secure because everything has been held electronically. Okay. You can take loan against your shares because it's digitally maintained. Okay. It's very easy to maintain it, and it's also easy to transfer it. If I want to transfer shares from my account to my wife's account, I can do that. Okay. With just a single click of button. And nowadays, mutual funds can also be held into a demat account. If you have heard, uh, some of the institutes have also signed up for their degrees to be held into an electronic format in a demat. Okay, so I think the future is demat. Maybe 5 years or 10 years down the line, you will find everything into a demat. Your gold will be into a demat. Your FDs can also go into a demat. Your real estate can also go into a demat. Okay, so that's what government is basically working on a lot of factors. So demat is a very good thing. If you have not opened it, open one demat account. Okay. The right issue is one of a very important key nowadays because a lot of companies are coming up with this right issues. So I'll just explain you, give you an overview of what a right issue is. So a right issue in a very simple factor is given by listed companies. Okay. Where the record and date is been fixed by the companies, and entire decision of giving a bonus or a right issue or everything. Right issue is basically a part of a corporate action, and all this decision has been done taken by the board. Okay, that do you want to give right issue? Right issue is only given to the existing shareholders. Okay, not the new shareholders basically. Okay, and generally a right issue is been given in a discount one, because if a right issue comes up where promoter the company wants to dilute their equities, okay, give more stocks to the existing shareholders, and they come up and say that okay, the stock price currently is trading at 200 rupees and I will also give you at 200 rupees, people will not buy it from the promoter. It's better people will go into open market and buy it. So that's the reason generally a right issue comes into a discount factor on always. Okay, so any discount, it could be maybe 10%, 20%, but it's always in a discount one, so that people could subscribe for it. Generally, whenever you apply for a right issue, you get those as a T+2 settlement factor itself. And rights can be done in full also, and in a particular part also. Let's say if you are eligible for 100 shares as a right issue, which a letter will be received to you through an email or through a physical letter, which gives all these details that you hold 1000 shares and you are eligible for 100 right issues. Okay, you can apply for more also, but minimum 100 you will get. So if there are people who say, okay, I don't want to buy it from a right issue. Okay, so they're basically who people who re-announce it. So those allocation can be given to you if you apply for a larger pie of whatever has been allocated to you. Okay, so now let's understand what are the do's of investing into secondary market. A very, very important part: research before investing, not after. A lot of people generally do that. So they buy a stock. If the stock is going good, so they say, oh, everything is going good, fantastic. But when the stock starts falling down, then they come and say, oh, what is this company all about? Let me understand. Okay, let me research. Who are the promoters? What product they make? And then you understand, oh, this product is already discounted into market. Okay, so it's always suggested that you should research before, not after. Okay, only invest whatever is surplus at your end. Do not invest your core money. So as I said, into financial planning, you also need to plan it accordingly for your retirement and all other factors. So don't disturb that money. Okay, and whenever you invest into equities, always invest into a surplus factor. Build a stock portfolio, very important. Just don't go randomly and invest in any companies. Okay, what will happen is like you will have a 1 lakh rupees of portfolio with 100 companies into it. So that's a very bad portfolio in our financial planning factor. Limit to 10, 20 companies, quality companies, which you can understand and manage it. Also understand their product very well accordingly. Okay, hold the winners and cut the losers. A lot of people basically do the opposite of it. Okay, whenever a particular stock price increase, they just book the profit out of it, and whenever the stock price decreases of a particular stock, they keep holding it, saying that ठीक है अभी खराब है तो होल्ड करते हैं, लेट्स सी कभी ना कभी तो धंधा बनेगा. So let me give you some examples. Reliance Power in 2007-8, still the price has not come. Suzlon, still the price has not come. Okay, and there are a lot of companies, but these are famous examples which are available into equity markets. Okay, so the price never comes up back again. So if they are losers, if the business model has been demised, if there is a promoter issue, sell it immediately and invest into quality companies. And very important is invest consistently. So just don't do like, okay, I will collect money through every month, add up that sum and then invest in one shot. So don't do that. Invest consistently. You have 10,000, 5,000, 11, 15,000, 2,000. Consistently invest it. Okay. So what happens is you get an entire part of the market. So your average, basically, so the rupee cost averaging happens fantastically. Okay. So that's also one of a very important key in investing. Okay. Also, accumulate an emergency fund. So obviously, generally it has been suggested that your 6 months salary should be available as an emergency fund. At least the important factor that the basic consumption need and your EMIs, okay, should be collected together, multiplied by 6, and then that should be available as an emergency fund to you. Because people who had this emergency fund did not had a COVID impact, the pandemic impact basically. Okay, understand the options available to invest. First, research, understand, do the risk assessment test by your side. Okay, understand how much risk basically you can take, and then only invest accordingly. Make informed decisions, obviously. This is a very, very important key. Be patient with your investment. Okay, else you will become a patient. Okay, so patience is a very, very important key which you should have. Get an education. If you don't understand a particular thing, just don't go and buy it accordingly. Get educated yourself and then only invest, and deal with authorized SEBI registered intermediaries only. The list of intermediaries are already available on the SEBI website, sebi.gov.in. Okay, into the intermediate sections. If you go there, you can find your stockbrokers, your sub-brokers, your financial advisors, all are listed there basically. So invest only through those. Okay. Very important. What are the don'ts of investing? Don't take investing as gambling. Very important. You want to do gambling? There are casinos available in India. Please go there and do it. Okay. Don't gamble into stock markets or equity, because see, you cannot say that a particular company is going to make profit in next quarter or not, or next month or not, or next day or not. Okay, it's very difficult to judge. But over a period of time, obviously they will make money. Okay, so it in a simpler format is I can't judge that whether the rainfall is going to come in next 15-20 minutes, right, or next 1 hour. But obviously I can judge that in next 1 year the rainfall is going to happen. Okay, so that's the reason you should never gamble. You should never speculate on a particular price. Don't invest blindly on free or tips or recommendations which are available in market. Obviously, research first and then only invest. Yes, very important. Don't have any unrealistic expectation. People believe that if I invest into stock markets, my money should grow by 50 or 100% in 2 months, 3 months time. That does not happen. Okay. If it was true, then Mr. Mukesh Ambani could not have opened Reliance and managed such a big conglomerate across. He would have just booked everything, sold everything, and put all the money into equities market. Okay, and then accordingly, basically grow his money in 50 and 60% of growth, where he's struggling right now to grow his company by 25-30% accordingly. Okay. Don't follow the herd mentality. If everybody is investing into a particular sector, everybody is investing into a particular stock, just don't go and buy. Because what happens is generally the risk appetite is different. Okay, if my friend is investing, I should invest into it. It does not happen, because his risk appetite is different. Your risk appetite is different. His vision is different. Your vision is different. Okay, some big investor, okay, has invested into that particular company, so I should also invest. We should not do that, because his vision, his goal, his ideology is totally different. Okay, it may also happen that he invests a bigger chunk of money, and as the stock price grows, he also starts booking profits out of it. and you don't know what actually happened into it. Okay, so generally do not go through the herd mentality. Okay, define your own risk and invest accordingly. Avoid psychological basis traps. So the best thing is FOMO, fear of missing out. Okay, so avoid that. Research, have patience, then only invest accordingly. Okay, now what services are offered by depository participants? So in India, basically we have two depositories, NSDL and CDSL. CDSL is the largest depository now in India with 6 crore demat accounts. Okay, so what offers are there? They offer demat services like electronically holding of your shares. They also offer remat services, that if you want to convert your digital shares into a physical certificate, that services is also available. Generally, nobody does that because that's the reason we moved from a physical to an electronic format. Okay. Transfer of securities is also one of the services which is offered. As I said, that if I want to transfer shares from my account to my wife's account, I can do that. Okay. And transmission of shares. So transmission is like I appoint a nominee, and if I die, so my nominee can claim those shares and get transferred all those shares from my demat account to her demat account accordingly. Okay, so these are all the services offered by depository participants. Okay, digital services offered are easiest, my easy smart, e-voting, and e-cash. So easy is basically where you can just download the app and check the entire holding, whatever stocks you have brought, what shares, what mutual funds I hold in my demat accounts. Let's say if you have multiple demat accounts, so that entire thing has been clubbed up, okay, and showed you in one single statement. Okay, easiest is a way where you can enter into a secure transaction. As I said, if I want to transfer shares from my account to my wife's account or my friend's account, I can do that through the concept known as easiest facility. MyEasy is a mobile app where you can download and use this all facilities. Smart is an SMS facility which is available, SMS alerts. So whenever you sell a particular share from your demat account and it goes from your demat account, you get a text message from CDSL saying that this particular stock has been moved out of your demat account. If there is any kind of corporate action which is going to happen into a particular stock, whether it is bonus split or let's say there is a voting which is going to happen, so all those information is being provided by the depository services through an SMS facility. E-voting nowadays happens because physical voting people it's not available or not practically possible, because if the head office is in Mumbai and if you're staying in let's say Guwahati or let's say Delhi, it's very difficult to travel from there to just to attend a annual general meeting and vote on behalf of you. So nowadays the AGMs are available on such kind of digital platforms, and you can also e-vote out of it. E-cash is basically an electronical consolidated account statement. Okay, so every month at the end of month you receive this statement from the depository participants, where it collaborates with all the demat accounts, all the investment which you hold in electronic format, and gives you a display of your consolidated account. So you can actually see, okay, what is my total investment across different parts, like in mutual funds how much, in my equities how much, everything in detail. Okay. If you have any doubts, any issues, in any grievances, you can basically use these services. There is an online system. You can also email at complaints@cdslindia.com if you have a CDSL account. But generally, I will suggest, if you have any doubts first, please go and approach your stockbroker first. Okay. If he does not solve your issue, then approach to CDSL, stock exchanges, or SEBI accordingly. Okay. So we all are available here to understand the queries. Don't just leave it around. If the stockbroker does not reply, please use the second line of complaints. Okay. You can also get all the updates you can also get all the updates and information on the website. Okay, and there is an investor corner also. You can follow CDSL at the rate CDSL India on Facebook, LinkedIn, and Twitter also to get live updates. So anything happens into equities, into demat accounts, any new thing which comes up, it's these updates are always available into here. Okay. Key takeaways for the investors: always update your contact details with your stockbrokers. If you change your contact details, please do update it. Okay, with your trading account as well as your demat account, contact details as well as your bank account. Very, very important, register a nominee. A lot of people do not do it. The best part which is available is you can split the nomination also. Like if I want to appoint two nominees like my wife and my daughter, I can split it with 50-50%, 60-40, whatever percentage you want. Okay, you can split it up to 3 nominations. So that's the beauty of it. Okay, whatever transaction happens, track it, understand it, then only do it, verify those transactions. Okay, as I said, that do not deal with any unsolicited tips or anything. If you receive a text message from anyone that this particular stock is going to grow by 15-20% or 100% in next 2 days, some particular investor is going to invest, it's a scam. Please do not invest accordingly. Okay, research, buy good companies, quality companies, and invest accordingly. Okay, if you do not understand investing, if you're not comfortable by researching and doing all those factors, best way, buy a mutual fund. Okay, that's the best way to do it. Okay, also one of a very good quiz contest is going on by SEBI and NISM. Okay, it's specially for students, which I wanted to share you with all the students across. The link is there, quiz.nism.ac.in. So please go and register there. It's an entire quiz especially for students. There are fantastic prizes around. Okay, you can also register by using this QR code also. Okay, but go to the website, create a link, answer a question, and do it. There are 2 rounds. One is a quiz round and the second is an essay round. But it's a fantastic way. 1 lakh rupees is also prize. So even a college can promote this accordingly and let a group of people enter into it and work it accordingly, especially for college students. Okay. This is where I end my presentation. There are 2 things which I will share it with you. One is a booklet which is specially designed by CDSL. Okay, it has entire details of investing, that how you should invest, why you should invest, what are things available, what are the do's and don'ts. An entire fantastic way they have actually articulated it. Okay, I will share this link from where you can download it. And there is one more link which is a feedback link about this session. Excuse me. So where you can give a feedback of it. I will just place that into a chat box so you can. So can you place it to the YouTube comment section so people can access it?
Yeah, sure. We will do that.
Yeah. So my screen is visible?
Not now.
Okay.
Now it is not visible.
The sharing. Okay. Sorry. So with this, I end with my presentation and details. So if you have any questions, we can take those.
Yeah. Thank you, Samrat sir, for such an precious, I must say, an insightful presentation, because you have given a detailed understanding of financial planning, primary market, secondary market, investment options, and the do's and don'ts of investment. So I was observing in the chat in YouTube, whenever anybody is raising the question, in the very next slide, the answer was there automatically. So there was a question, there was the answer. So it was such a beautifully planned presentation being presented by an amazing personality like you, Mr. Samrat Jadhav, sir. But there is one question which I think I should raise to you. And the question is, what's your personal philosophy of investment? I don't know who has asked this, but must be a very good philosopher that student is. So what is your personal philosophy of investment?
So I like a fantastic quote, which I also follow always. Be greedy when others are fearful, and be fearful when others are greedy. So if everybody is going to a particular asset class, you should stay away from it. Okay, get 10 steps away and be safe. Okay, if everybody is talking about a particular asset class and people are investing into it, be safe, get out of it. If everybody is saying that no, it's a big problem, this Russia-Ukraine war is going to spoil the entire thing, it's the best time to invest in any asset class, I would say.
Oh, that's great. Fantastic, sir. And thank you so much once again. And this is the motto behind organizing such knowledge webinars. Motto of Shanti Business School Ahmedabad and LKMIMSR Chandrapur, so that we can spread knowledge, awareness on contemporary, important, and relevant topics.
Right.
Of various nature coming from various specialization. So thank you once again, Samrat sir. Now I would request Dr. Jayesh Chakravorty sir to please offer a vote of thanks.
Thank you, Professor Parik. Am I audible?
Yeah, sir.
So you have possibility to share, to express my vote of thanks, but I'm apart from thankful, I am going to congratulate all of you. Let us congratulate all the YouTube viewers. Just now the figure is in my hand that near about 265 users has joined through YouTube, and many of them, probably most of them, are from management field. So let us congratulate all those students, because on this sunny day of March 12th, 2022, Shanti Business School and LKMIMSR, after just an pandemic era, what a fantastic start today. The motive behind organizing this kind of financial program is basically to give a research gap to the management students. I hope the motive was fulfilled today. Actually, any financial goals can be fulfilled only through if we work through our constitutions, like by the people, for the people, and to the people. So if that motive is there, definitely we are going to success today. The best example I could like to quote here is our chief guest of today's function, Honorable Shri Vijay Khatiji. He was here. I mean, we have invited him, and he was not well. He was not keeping well, and in spite of that, you can see that not only he has addressed us, but now also he is being tuned with us and listening to entire webinar. And in his inaugural address, he has quite rightly mentioned that whatever one has to do of financial planning, that has to be for the people. So see the views of the corporate like ACC. In this particular pandemic, ACC is quite, successively they have set their financial goals to reach to the needs of the society. Whether ACC has uplifted the lives and livelihood of the people nearby in Chandrapur region, and we being in Chandrapur, I would like to witness that we have seen that how the ACC is doing a commendable work in uplifting the livelihood of the poor people through their corporate social responsibility. That is called one sort of financial goals fulfillment for the people. And I hope that Vijay Khatiji sir is with us today. He's listening to me. And this kind of association with Shanti Business School and LKMIMSR is not only for today's webinar, but it will be for a long term. And we look forward for Mr. Vijay Khatiji that he will be one of our panel of experts for CSR platform in both the institutions. If Dr. Neha Sharma madam is permitting me or allowing me, that he should be one of our panel member for CSR funding. So that is what I am requesting to him through this platform. Today we had Kritika Ojha. What a commendable, job she has done today. What a financial talks she has given today. As the topic was importance of financial planning and diligence of investments. But both these speakers, I don't know whether they have communicated earlier or not, but they have segregated this topic. Diligence of investment is rightly talked by Kritika Ojha. And mostly I should not thank her, rather than we all should felicitate her. If at all she should be physically present over here, it will rather a great occasion for her to felicitate her. She has given a total insight on fundraising, startup of valuation, forecasting the due diligence of investments, role of valuation, she has rightly pointed out, according to the regulatory framework, and ideal financial forecasting, legal due diligence has given a gap for research. It's a importance for management students to take a note of it, that whatever she has quoted today has given a gap of study of mergers and acquisitions. Why mergers and acquisitions quite often fail? So this can be a topic of discussion or topic of research for many of the researchers over here. So a fantastic talk by Kritika Ojha, deeply indebted to her for her commendable talk on this particular occasion on national webinar on importance of financial planning. I think she's there to acknowledge our thanks and felicitation. If she is not there, I request Dr. Neha Sharma ma'am to felicitate her on behalf of all of us, that she has really done a good job today. Thanks to her for her financial insight. I am grateful today to the second speaker, Mr. Samrat Jadhav. He has highlighted the importance of financial planning actually on an individual level, not on an institute level, but on an individual level. Excellent financial advising is being given by CDCL, like need of saving and inflation and what not, financial planning, investment classes, then mutual funds, and do's and don'ts. So again, he has rightly told that as per your age, go on investing. If you are age of 40% risk, and the 60% you can go for a safe class. But I feel so that the brokers, the agents and all, actually they should be, they should give more financially literacy to the people rather than giving a big dreams and all. So I request on this platform that let us make to the people the financial literate, so that they can not only take risk. Risk taking is something like which may have some harsh results also. Let us take calculated risk. Just motivate them or train them to take a calculated risk, so that their hard-earned money should be kept in a very safe hands. So that should be one of the motive of CDSL and all the people or financial people. Though I am not a financial man, but of course, great to hear all the financial things from you people. I congratulate all of you over here to spare their valuable time and make this event successful. It's a very small word to thank Dr. Neha Sharma. मैं कैसे उनको thanks कर सकता हूँ? It's our mutual collaboration. So we congratulate each other that we have successfully fulfilled the objectives of organizing this national webinar today. The motive is fulfilled. So let us congratulate Shanti Business School and the team of Dr. Neha ma'am, Professor Parekh, Dr. Avinash Kumar is there. So commendable job you people have did today, and hope the same work should be done in the near future also. I can see Ashwini Thorat over here. So probably from CDSL. So she should be also being congratulated to be a part of this remarkable event. I am really thankful to my team also. They have done a commendable. Professor Bipin Bogekar, who was a coordinator of this event. So he has left no stone unturned to make this event successful. My entire team of professors, teaching and non-teaching staff. And of course, we should thank always the Dr. Ajay Kushwa. His technical support is like commendable. Whenever we felt any difficulties in a technical part, he is there to solve it. And without his help, probably we could have not able to see each other, view each other, listen each other. So a big thanks to Dr. Ajay Kushwa, who is with us today, and the YouTube viewers, all the students of PGDBM and MBA and all from different stream of managements. I'm very much congratulating you for this attending this event, and hopefully many of you will find a good research gap over here and will be motivated to undergo some of the projects in the related areas of Kritika Ojha and Mr. Samrat Jadhav, so that you can do the project work under their guidance. And with this word, I end over here. Over to you, Professor Parekh. Yeah. Thank you.
Yeah, thank you so much, sir, for actually we all are overwhelmed with your vote of thanks. So we all are feeling like we are precious today, valued and highly precious rather. Thank you so much. And with this, we have come to an end to this webinar. As in the words of Swami Vivekananda, education is the manifestation of your inner strength. So today, our two keynote speakers, our chief guest, Dr. Neha Sharma ma'am, Dr. Jayesh Chakravorty sir, they have educated the audience and the students, those who joined us directly or indirectly through YouTube, and which will turn into the strength, which will turn into a better India. Thank you so much, and we end here.
Ajay Kushwa, it's the end over here. Please sign off.